Good morning, guys. So today is the 22nd of May, and it's about 20 minutes past 8 a.m. Eastern Time. So we'll cover what happened yesterday. So the theme today is, the agenda today is why market dropped yesterday. What was the main concern of the investors? Then we'll go get into how the market is doing. We'll cover the US key indices. We'll look into how the futures are trading now, and then a few earnings announced last night and upcoming earning key one. And we'll look into SMCI, what is happening in SMCI, which is the darling of the retail investors. Okay. So what happened yesterday was US Treasury issued 16 billion new 20 years bonds. They have to issue about 514 billion in next 3 months. And this is a small ticket size which was issued yesterday. Now, this week has been a concern for the sovereign debt, government debt. Earlier during the week, Japan government debt, they issued government debt, and there was some concerns, there were some worries about it. Now, why there is a worry? Now, let me bring this chart to you to explain why there is an ongoing worry about the US debt. Okay. So let me show you this chart. So now, look at this chart. This goes back since 1980 until November 2024, and the source is US federal government tax revenue by year, right? Source, the balance US tax revenue. So if you see how the debt has gone from George Bush Senior, George Bush era to Clinton, to George Bush begins, then Obama, then Trump, and then Biden. So apart from which party was in power, the debt has been increasing, right? From almost some $1 trillion, a few $1 trillion to $35 trillion as of November. And if we check now, so let me bring this chart. So as of today, it's about $36 trillion. And you can see that's 106K for every single person in America, which is alarming. And then basically, which is definitely a point of concern. And that's what the market is looking at, right? So me close this. Okay. Now look at the yields. These are the US Treasury yields from 1 month to all the way to 30 years. 17th January 2020 was 17th or 18th January 2020 was the time when the US first COVID case was discovered. And look at the yields at that time. 30 years was at 2.828, almost 2.30. Where is it now? 5.08. So look at the difference. So the US government borrowing costs, so these yields are borrowing costs for 1 month, 3 months, 6 months, and 30 years. That's the US government borrowing cost has doubled, more than doubled from almost pre-COVID or COVID to today, right? So that is the point of concern, right? So that is the reason the market got sold off. Now, the point of sell-off is the point where we have to discuss what exactly happened. Now, if you see the market, what happened in the month of April, trade tariff down. Market actually got sold off from here. So market was a little inflated. I might say market was into a little bit of overbought zone. And if you see technically, we failed to break this trend line, right? So we just failed in front of this trend line. So let me adjust it a bit. You will find it a little bit interesting. So let me just actually, okay, so let me just actually see how, let me adjust it a bit. Okay, so basically, 1 second. Right, so let me just see. We just remain a little short of hitting this trend line, and that's what I told you in last my calls, that Dow Jones is actually heading down, and that's what happened. So I'm not surprised by what happened yesterday. So the event which triggered was the US 20 years. bond auction. Okay. Let's see, where is our S&P? That's what we have seen in S&P. I mean, we have broken this trend line, and S&P was seeing signs of weakness, right? I was expecting S&P to remain within this range, but again, S&P has broken the low of Monday, so we are heading towards, and that's what I said, that the market is heading towards 5791 to 5800 on S&P. Nothing surprises me. Let's go here. Same thing with the NASDAQ, right? So NASDAQ actually has basically said same thing. Broke Monday's low, dropped further. Right? Now, the point to discuss is it has happened here, and that's where the market is a little bit overbought. The market needs some sort of a correction. Market may come down, like NASDAQ can come down to 20,600. That's what I suggested yesterday, right? So let's go to the weekly chart. That's what I showed you yesterday, that we're going to remain between this range, right? Same thing goes for S&P. Let's go to the weekly chart. And that's what the range I was expecting, that this range is going to continue, and that's what we have done. So I'm not surprised at all. Here we have an outside week. Outside week is we have actually broken the high of the previous week, and we are trading close to or a little lower than. So the low for last week was 4177, and the low for this week is about the same. So we're trading there. So let's go further. Let's look at what is the futures market doing. And we saw this chart yesterday, and that's what I said, that this is where futures are going, between 21,120 to 21,100. And that's what we've seen the low. So far, 2,100 overnight, right? And we have broken this trend line, right? So 2,100 is the key level for today. If it go further slide, if it slips further, then we're going to 21,730. I personally think we have broken this trend line, and generally there is a possibility, again, emphasize possibility of retest. There is a possibility of retest, and that's what I'm looking at, as long as 21K holds on NASDAQ, MNQ or NQ. Let's go look at the MES. Same thing. We broke this trend line, right? We're testing this. This is what we talked about yesterday. So 5843, 5825. We are near there. We break this one further, 5734 on the MES or ES. Okay. Let's move forward. So the darling of retail guys, retail traders. I put on my tweet last week, I think it was Monday or Tuesday, saying that once 39 is broken, this stock will have life. So SMCI is facing, okay. This was on Monday, and after that I put something on Tuesday, so Wednesday or Thursday, saying that SMCI facing this price gap. And exactly, SMCI failed to break this one. As long as we remain below, and this is today, as long as we remain below 43, 44, we are gradually heading towards 39. That's the level I'm looking to buy into. So this is basically the gap which I am looking to fill, which I think it should, it's most likely going to fill. And this is the gap I'm looking at. Fills this gap, we have further room on the upside. Okay, so what was on the earning calendar last night, right? So let's say, okay. All right, so somehow my earning calendar, okay. So we had earning calendar from Snowflake, right? So let's see what happened after that. Strong barrier, 185, 186. Now, pre-market, it's 194. So the market liked the results, right? Now, let's see, where do we have resistance? 194. If we decisively break 194, 195, and I think the pre-market high is, okay, let's check the pre-market high. Let me go to 4 hourly, so I can see what is the pre-market high. So the pre-market high is, okay, sorry, my extended hours are not showing. So pre-market high is about 20201, right? So that's keep that in mind, right? Let's go back to our weekly chart. What is it showing? 203. If we don't break 203, we're going to remain between 203. We can, at the open, we can retest 201, 203 between 193, 194. That's where it looks like. Today we have earnings from ServiceNow. Now, ServiceNow has a huge price gap here between 1142 to 1027. We have just tested this one, and it seems like we are consolidating. So probably we hold this level, I'll say 1000, 1010. We may go back to 1034. That looks like the range. Whichever side we break, 1035, 40, we go higher, we break 1005 on the downside, we go lower, we have this price gap to fill. So guys, short and sweet. Have a wonderful trading day. I will see you guys tomorrow, and I'll see you guys tomorrow. Have a wonderful trading day. And one more thing, yes. So let me show you the seasonality. Let me bring the seasonality. So market probability map, or let's call it seasonality, whatever you like it. For today, Dow 45% looks like on that way bearish. S&P looks bearish, but somehow Nasdaq looks like bullish. Mixed sentiments. We have a long weekend, Memorial Day holiday on Monday, so the market most of the traders will be probably taking a long weekend, taking a day off from Friday. Market will be a little thin, so whatever option expiry will happen today, the action will happen today. Market looks like on the front of sentiment-wise, it looks like mixed, but historically, Friday before the Memorial Day has been a bullish day. Let's see if the history proves true this time. Guys, I appreciate you are watching this video. I encourage to watch, like, subscribe, and please follow us on my website, twtlearning.com, on Twitter, it's at twtlearning, and on YouTube, which you are watching at the moment. TWT Learning is, we try to identify high probability investing trading setups, right? High probability. Please focus on high probability. We provide financial market education and research. So if you have any interest in learning financial market psychology, order flow, price action, patterns, option markets, how to look at the option market, please feel free to contact us. You can go to the website and click on contact us and get in touch with us. Thank you very much. I appreciate your time and have a wonderful trading day.